Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. I'm sorry I'm doing this Sunday night, but we had some technical difficulties and everything's been resolved now, so here it is. So on Friday, we saw a big gap up on the opening. Amazon, phenomenal, was up almost more than 9%. Actually was trading a lot higher on Amazon, was trading around up 30. So we were up around the 252 level. 253, I tried to short Amazon. I didn't get filled. And then Apple was up on the day before reversing down on the day. Apple in pre-market was trading 283 and closed down $1.37. So more or less the the trade there was Amazon, and we got this big gap up. And I said on Thursday night, if we do get this big gap up, we had nothing but sell divergences on the 30 and 60 minute time frames. Let them have them. I'm going to show this great pattern on the spiders and the Qs off the 30 and 60 minute time frame. I then had really big sell reversals, big sells here off the 30 minute time frame in Avago on Meta. Meta was phenomenal. The patterns of Meta were just absolutely phenomenal on Meta. Tesla had some really great short patterns, but Tesla actually had a huge buy divergence off the 30-minute time frame that ricocheted pretty much up about almost $13 just off the 30-minute time frame. Microsoft still in a negative trend on the 15 and 30-minute time frame. We saw Palantir had the big sell reversal, but still bullish on the 30 and 60-minute time frame. Coinbase, unbelievable pattern in Coinbase. Coinbase at one time was trading 361, dropped 18 by the end of the day. The high, I believe, was right around 1 o'clock time period. A great pattern there. And we saw MSTR could not get going. We saw the reversal on the 60-minute time frames on IBIT. So Bitcoin had an underlying bid once that 30 and 60, the 60s reversed to buy on indicator 4, correlating with the 30s. But let me just show you here what I'm talking about here. I mean, I'm just getting used to my... All right, so for here, you can see, first of all, when we got the big push up on the opening, because Amazon and Apple had great earnings, and Amazon really was the catalyst here. You can see, first of all, right here, here's the 31st, and you can see the big push up here, right here. So first of all, on the push up right here, the MACDs were negative on the 30 and the 60-minute time frame. So you're getting a big push up here, and the MACDs cannot confirm the highs. Pushing up into the negative MACD, complete no-no, huge problem there. All right. Now, when the 15-minute, the 30-minute reversed to buy here, okay, you went into what's called a buy disconnect. But again, the overbought condition, okay, you can still have a buy disconnect, and once you have a buy disconnect, you can also have buy and sell divergences. So a really great short pattern here on the overbought. As you see, the 60 was always in a negative trend here. If you look at the 15-minute time frame, you can see here that when we started getting this drop, I knew that now the 15 reversed to sell and it correlated with its 60, so we had some really great shorting opportunities off that. And then if you look here, you can see that we made new lows here. Friday was really full of great divergences. When you made the new low right here at 130, the MACDs cannot confirm the low on the 15. So I was calling longs on the S&Ps below the 68.45. The low was 68.42. Now, I did not expect them to rally all the way up to 6,900, and that's exactly what they did. It was the end of the month, and we probably had some big buy orders going in there, and then when you got that big sell, that big push up, and the 30-minute reverse to sell here, it actually set up the really great short. S&Ps I was calling shorts between the 68.94 to 69.02, 03 level, 68.95 to 69.02 level. The high was 6,900 exactly. So basically this pattern right here, all right, again, it was in the 30-minute reverse to sell, and it correlated with its 60. And look at that monster bear flag, the 30-minute time frame overbought. Look at the 684.80. They got absolutely caboosed. They dropped. Look at that drop, magnificent drop here on the spiders. The S&Ps dropped from 6,900 all the way down to 6,870. A monster drop here. 60. You can see 684.80. They dropped to 681.99, almost $3 on the spiders. Again, monster short. So when I walk in every single day, the number one thing I do is I look at the bigger time frames, and I knew coming in that the 30 and 60-minute time frames on the underlying ETFs were going to give the market fits. I said on my Thursday night podcast that these 30-minute time frames and 60s are going to run into a brick wall here. Again, really, really strong sell divergences, and market just hit it and then got cabooshed. And then the buy divergence on the new lows when the 15s could not confirm, rallied. Now again, rallying almost 58 points off the low. I did not see that. I did capture the long, but we were out, anywhere from 8 to 14, 8 to 12 points up on the S&P. But then once that 60-minute reverse to sell, I knew the short on the overbought condition on the 15 and 30-minute time frames, because now the 30-minute reverse to sell, and it correlated with its 60. Let them have them. Literally within from 330 to 350, the S&Ps dropped 30 points. So really great patterns there. Let me show you Meta here. Meta was remarkable. So a Meta reverse to sell, you can see the 60-minute a couple of days ago, the 30-minute still in sell mode here. On the 31st, it reverses to sell. It correlates with its 60. Just look at this. Look at the negative MACD here, the rising ADX, the big selling pressure. Okay, the big selling pressure here. All right, and you can see here the push up right here to 674. And I'm thinking to myself, who's buying this here, right here? Look at this, 674. So it opened here at 674, right? The high 674.89, so rally like 33 cents. You got the push up into the negative MACD. You get the push up into the rising ADX. Get a push up into the negative MACD of negative 33.35. You get the push up here on the 30-minute, right, on the opening, the negative MACD, the rising ADX, the big selling pressure. Who's buying it up there? Guess what? We called the short. Okay? I said look to short Meta above 72.5, 73, right on the opening. It was an absolute Picasso to be able to see a push-up of that magnitude, right? To see a push-up of that magnitude. Okay, into the negative MACDs, the rising ADXs, the big selling pressures on the 60 and 30-minute time frame. Look what Meta did. Meta got absolutely cabooshed here. Okay, it got absolutely cabooshed. Literally in the same bar, it dropped from 74 and change down to 656. You can't ask for a better pattern than that. So with that being said, what's really important here is the ability to see the patterns, to be able to identify the patterns, to be able to see these patterns before the market opens. That's what I do. When I walk through that door, I look at the bigger time frames, the 30 and the 60-minute time frames. I want to see if there's any big buy and sell divergences. If you look at Tesla here, you can see when Tesla pushed down to new lows here, right here. Again, when Tesla was making the new highs here, you can see that the MACDs cannot confirm on the 60. We had great shorts above the 55.5, 56.5, 57.5 range. Got absolutely cabooshed. Look at that drop of $14. Okay, even though the 60 reverses to buy, but now you have to say to yourself, even on the new low for the day, the MACDs cannot confirm on the on the 30-minute time frame. And even though the algorithm reversed to buy here, you can see the new low. The MACDs cannot confirm the low on the 60-minute. But more so on the 30-minute when the MACDs were positive. That's an absolute Picasso. Absolute Picasso. And that's exactly what I wanted to show you. Okay, great buy divergence there. Coinbase got absolutely cabooshed. You can see Coinbase, first of all, when it penciled up here, it opened at 336, trades high as 355. When you've got the overbought condition right here, 361, the MACDs could not confirm on the 60-minute time frame. All right, and then you got this deep oversold condition on the 15 into the on the 30 into the positive MACD. That caught a little bit of a bid from 45 up to 51. But let me show you something on the 5-minute time frame. You see when the 5-minute time frame, where is this here? Let me see this here. This is 651. Right here. Look at this Coinbase right here. 361.40. So when you start seeing the MACDs negative like this above the pivot, and you start seeing them making a new high, I caught this short here, right? I said, look to short this thing above 60.5 to 64, 63.5, 64. I said I would look to short. And you can see here, 361.40. You're making new highs here, and the MACDs on the 5-minute time frame couldn't confirm. Nothing but absolute cabooshin. And then it drops all the way down to 52.80. You could have taken the oversold condition on the 5-minute against the 30-minute, on the 30-minute, and on the 60-minute. You got another push up here. But once the 15-minute time frame right here, you can see the 15 reverses to sell right here. The highs, there's an 85% chance that the highs are in for the day. And then it drops again down to 45. It rallies back up here. Now, when it rallied back up here at 245, you can see what? That the 30-minute reverses to sell at 130. So at 130, the 30 reverses to sell, correlates with the 15. You have what's called a sell disconnect. What's the strategy? You short the first bounce on the 15, and there it is. Coinbase absolutely cabooshed. Look at that pattern. 352 cabooshed all the way down, dropped $9. This is what I teach every day based upon the strategy, the combination methodology. You're looking at 3 time frames. Indicator 4 gives you the ability to identify the condition. So I have 3 time frames, 5 conditions, 10 strategies, and that's it, period. And then once you identify that, each of the condition has a buy and a sell divergence. So you have 3 time frames, a 15, a 30, a 60, 5 conditions, and then you got a buy and a sell divergence for each of the 5 conditions. All right? Okay. When I get back, I will tell you what I expect for Monday. So going into Monday, we have, again, I think we're on day 28th or 29th of the government shutdown. There's talks about China now, playing nice about the rare earth minerals. Rare earth minerals. They really don't want to have a war here. They need us to help their economy along. They're struggling there in China. But with that being said, the 60-minute time frames, no matter how you look at it, are still negative on the MACDs. The MACDs are still above the pivot, blue over yellow. So even if we get some type of a crazy, insane rally, I would wait for any overbought conditions on the 30 or 60-minute time frames, and I would say let them have them. Okay? As far as long as they're concerned, you know how I feel here. I think the market is on borrowed time. We didn't have a bad September. We did not have a bad October. The bond market, even after 2 rate cuts, has been down. We hit a high of 119 and change. Now we're down about the 117 and change. So the bond market's not really gung-ho here. Gold is down to over roughly about 400 points off the high. Gold hit a high of 43.91. We're at 39.93 right now. I think gold drops another 400 or 500. Bitcoin traded down to the 02, 03 level. Now it's around 110. I think Bitcoin, again, I think these gaps are going to get filled in the next few weeks. So that maybe we don't even have the Santa Claus rally. Maybe it's already out. The market already rallied 2,000 points with expectations of interest rates cuts from a deep oversold condition to the interest rate cuts. And I think that, again, for me, I would be 100% in cash. And I would be looking to buy SQQQs, SPXUs, I think there's a lot of downside to come here, and those gaps will get filled. I've been doing this for 43 years. All right. When I get back, I want to share something with you that you really need to know. In order to be a great trader, one of the key elements of being a great trader is the ability to learn how to execute, how to scale into a trade. Scaling in and scaling out of trades, you cannot do, based upon my research, you cannot do single lot entries. That means like selling S&Ps at 91 and watching go to 94 and not adding or scaling in on the position or calling a range and then scaling in on the position based upon how many contracts. First of all, you want to determine if it's a pattern or a scalp trade and how many contracts you want to trade, whether they're micros and or E-minis. That is the key part here of being a great trader. Being able to scale in and scaling out of trades and being able to identify the patterns in such a way that you're able to profit. But again, learning to use that DOM or matrix is very important. It will either make or break you as a trader. Combined with learning how to scale in and scale out is very, very important. I'm telling you, I've been doing this now for 43 years. I've taught some of the best, and my students and my traders from all around the world really understand and they practice, and this is what separates them from being good to being great. They practice, and now I'm so proud of so many of my traders in my community to be able to execute so rapidly and trade, put orders in, lower your stops, cover, put bids in, and then it's just a remarkable way. And again, if you can make $500 a day on 5 accounts, it's life-changing, all right? So again, scaling in and scaling out, and also the way you execute your orders is very, very important. All right, with that being said, thank you for joining me on The Bull, the Bear, and the Ugly. Sorry I'm a couple of days late, but we got my technical problems all resolved. Thank you, Aaron, from coming from Hawaii to help me to fix this. Also, if you'd like to join my community of traders from all around the world, please go to my website, sktrading.live. If you'd like to follow me on social media, at official Stephen Kalayjian on X, Instagram, and TikTok. Also, I stream every Monday through Friday at 8 p.m. on my SK Trading YouTube, and also on my Funded Futures YouTube. I do the Asian session from 8 to 10 with my Funded Futures, Denny, Luke, myself. Great 2 hours, phenomenal. I look forward to it every Monday, Tuesday, Wednesday, Thursday. We have so much fun. I meet so many great people from all around. And if you'd like to text me or call me, my cell phone number is 914-500-7484. Have a great night, everybody. Again, I apologize for being late. Hope Sean gets this to you first thing tomorrow morning, but we'll be back on track tomorrow and airing every night at 6 o'clock. Thank you for joining me. God bless you, and God bless the United States of America. Take care, everybody.
Thanks for tuning in to The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.